please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. A bit of a recovery for the markets. Earlier, the Sensex was down about 200 points. Now it's down about 130 points. The mid-cap index is pretty much flat, and the advanced decline ratio is holding up in favor of the gaining side. A couple of large caps which are moving up as we speak. So GAIL is one of them. So that is a gain of about 2.5%. UPL has been a big mover today, a rally of close to about 4%, crossing its 100-day moving average. And keep your eye out on Tata Steel. That too is now back in the green, a gain of close to about 0.7%. But moving on to get you some opinion on the markets and all this, the entire situation about IL&FS and how their credit rating agents, the credit rating got downgraded from AAA to junk in just in one step. So regarding all that, we had a chat with Rashesh Shah of Edelweiss, where he said that mutual funds should not outsource the credit risk. He also went on to say that there is a solution to the IL&FS mess in sight if the shareholders get up to 10,000 crore in equity and liquidity. Listen in.
Our mutual fund industry is geared to take interest rate risk, but not geared to take credit risk. If you find out the credit research provided by brokers, the credit research provided that is carried out by mutual fund, it is very, very low. Nobody does credit research in India, and I think this should highlight the fact that we need to not outsource credit research to credit rating agencies, but everybody needs to conduct credit research. IL&FS is larger. The larger problem is a liquidity problem, not so much solvency problem. Yes, they were short of equity because they were geared a lot more than they should have been geared, but that was known to everybody, including the investors. And from what I hear, the investors have been talking about putting money or doing an IPO for the last 1 year. So I think equity need of IL&FS of say 5 to 10,000 crores was evident all along, but that equity shortage has been coupled with a liquidity mismatch, which is also another 8-10,000 crores. So if the investors provide liquidity and some equity, I think the problem can be handled. In the last 3-4 years, I think banks, the best part of the bank's portfolio has been their exposure to NBFCs. In fact, there is almost zero NPAs on banks giving loans to NBFCs across the board. That last 5 years, NBFCs were growing at 25 to 30% a year, and banks were growing at 8% a year. Now we are seeing bank credit growth has gone up from 8 to about 13, 14. I expect NBFC's credit growth will stabilize at about, say, about between 15 to 18%. I think the NBFC growth will get calibrated after 5 years of 25-30% growth. I think the next few years will be a 18% kind of growth for NBFCs. And what the equity markets have done is actually quickly recalibrated the growth hypothesis around NBFCs, which I think is not incorrect.
All right, then keep an eye out on a couple of stocks that are moving around. Indiabulls Housing Finance, well, that has been very, very volatile. But also keep an eye out on UPL. Now, that's recovered from the low point of the day. It was down close to around 1%. Now it's moved higher. In fact, it's holding with a gain of around 4%. And not just that, when UPL moves, remember we have a smaller listed company that's on the BSE, that's Uniforce. That holds close to around 5% stake in UPL. And on the back of that, whenever we see UPL move higher, this other smaller company, Uniforce, because its investment in UPL is much higher, and that one as well, it moves higher in tandem. Currently, in fact, it's holding with a gain of around 5%. I think that's the upper circuit for it. So it's locked out there on the back of the move that we're seeing in UPL. So both these two stocks, they normally move in tandem. In fact, we had the management of UPL earlier today with us. Let's hear out what he had to tell us.
Our scientists, our engineers are equal to best in the world, and we have been utilizing this talent, and that's why whenever we go abroad, whenever we acquire company, we have successfully turned it around and made it more profitable. We always look into companies which are suitable and good. Lower rupee, when we export, our earning in India may be little better. And cost of production in India is always very competitive.
Well, it's time now to talk about the market technicals and get in a few trading ideas. Ashwini Gujral and Sandeep Wagle join us on the show now. Ashwini, the last 30 minutes, the markets have been moving fairly sideways. Yes, from the start of the trading session, we have slipped quite a bit, but 30 minutes have been stable. How are you reading the tea leaves?
See, the bears have tried to break this market, but they have not been able to break 11,000, 1120. My sense is today the bears are trapped, and chances are we are now headed to 11,300. Maybe today, maybe tomorrow, but definitely the bears are trapped. They've not been able to make a lower low than yesterday. So Bank Nifty, we should be headed back at least to 25,600 and maybe even further. So now, the bears have something to think about, which means that they are failing, and hence you may see, sharper and stronger short covering. So given that, I think now there shouldn't be any worry as long as 11,000 is held on. And my sense is towards the close, this rally will pick up. And as we can see, a lot of the market is turning into the green. So RIL is a buy with a stop of 1200, target of 1265. UPL is a buy with a stop of 680, target of 705. And Yes Bank is a buy with a stop of 223, target of 237.
All right, Ashwini feels that in fact the shorts are trapped. It's likely that we could see a bit of a short covering bounce from here. Tomorrow we have expiry that plays out, so keep an eye out on that front as well. But let's get Sandeep Wagle as well into this conversation. Sandeep, your trade on the Nifty Bank, as well as you have a couple of picks for us.
Good morning, Nigel. I would have a similar view. I think we will see some more upside, at least 50 to 70 points from the current levels on the Nifty. Talk of the Bank Nifty, maybe 100, 150 points. So I would be bullish to that tune. And I would have a stock-specific bullish bias on a UPL. I recommend a buy in a UPL, stop loss of 672, target of 702. And I see some weakness in Tata Motors. I would sell that with a stop loss of 235, target of 222.
Okay, thank you very much for that. Let's get the early rates up from the European market. The rates would have just started trickling in. The futures were pointing to a fairly flat start. Let's see if we've got one or two rates at least. Well, very, very flat. So the FTSE is down 6 points. The CAC is higher by 3 points. The DAX is a gain of about 0.1. It's pretty directionless. The focus will shift to the FOMC outcome, which will be tonight, while a 25 basis points rate hike is pretty much expected by everyone on the street. The Fed's language on future rate hikes, the dot plot for next year, will be the key to track. For now, Europe is pretty
Let's get chatting with the management of Ashoka Buildcon. That's the company on our radar after the company has emerged as the lowest bidder for Rail Vikas Nigam's order. To discuss more about the order and what's the outlook for the remainder of this year, we have Mr. Satish Parekh, the MD of the company, who joins us. Hi Satish, thanks so much for joining in, sir. If you could give us a sense about, it's a JV, this project, we believe. It's a 750 crores approximately project, 794 crores. So what's your stake in this project? Give us some clarity on that.
Yes, thank you. This is project one in the JV with Stoitech Services Limited.
Right.
And we have around 75% stake. Okay. And Stoitech will have 25% stake in the JV.
All right.
Okay. If you could tell us, in terms of revenue recognition, what is going to be the trajectory? How much will you realize in, say, F5 2021?
So this is a total 794 two packages.
Yeah. And
time limit for this is 42 months. So in this year, we would realize only around 5% of this value.
Correct.
And next year onwards, it will be greater values.
All right. A couple of questions, sir. What does this take your order book to? If you could give us a sense of that.
Yeah, this will take our order book to 11,500.
11,500. All right.
Yeah.
Okay. If you could tell us, do you still maintain your 30% growth guidance for FY19? The reason we ask, because Q1 was a bit subdued for you with a revenue decline of 3%. So the asking rate for you to meet your guidance goes up significantly. Are you confident, and what gives you the confidence?
Yeah, we are very much confident of meeting our 30% guideline, because all our new projects, HAM projects, would start in Q3, by the end of Q3 and Q4.
Okay, you're talking about some HAM projects, Mr. Satish. I just wanted to understand, you had won around 5 contracts, I think, HAM projects. How many of them have got financial closure? How many of them, things are pending, like land that needs to be acquired?
See, out of 5 projects, 3 financial closures are complete.
Okay.
Another 2 are very much in advanced stage. And we have some time for a financial closure for that. So all financial closures will be within timelines. And as far as land acquisition in advanced stages in 3 projects, and 2 projects are lagging on land acquisition.
Okay. If you could tell us, what is your borrowing mix like? Do you tap the debt market at all? Because there is clearly a lot of liquidity tightness over there. Are you getting negatively impacted on account of that?
At present, we are a very well-funded company, so finance-wise, we are not having any pressures.
But do you issue commercial papers to raise funds?
Yeah, commercial papers are just in view of, it's just replacement of our working capital limit to get the rates down. It has nothing to do with the liquidity of the company.
So what's your total, what's your total debt in your books? How much of that is, and if you could give us your working capital number, and what is your current borrowing cost?
The current borrowing cost is sub 10.
Okay. And your total debt in your books?
Total debt in standalone would be around 250 crores.
Consol?
And consol will be 5,800 crores approximately.
Any plans to bring down this consolidated debt of 5,800 crores?
See, basically consolidated debt is all project tied up dates. So there are no plans to get this down. This will be, as we back the project, this may go up further.
Okay.
So sir, you're telling us that your consolidated debt is more than 5,000 crores and you're comfortable with these levels, and as you start executing the projects, the debt can go higher as well.
Not as we start executing, as we start bagging new projects.
Okay.
Because these are all project tied up dates.
Right. So
we are comfortable with our debt equity ratio.
So, and if you're borrowing at around 10%, then should we assume your interest outgo every year is around 500 crores?
But against this, we get toll revenues and annuities.
Okay. All right. All right. Sir, also you have another smaller part of your business, the Ratnagiri city gas distribution project, I think so. That's expected to start in the second half of this year, right?
Correct.
And what kind of revenues can we see coming in from this project in FY19 and FY20? You'll expect it to ramp up, isn't it?
See, this is the first of our city gas distribution project. So I would not like to state any revenues in this.
Okay.
But we definitely would start commercial operations in next quarter.
Okay.
And we have backed another 2 projects in city gas, which will commence in next year first quarter 1.
How much of money have you invested in these smaller projects?
These Ratnagiri, we have just invested 15 crores till now.
How many crores?
16.
16 crores. And the total investment, I believe, is going to be 30-40 crores.
Total investment in Ratnagiri would go up to 40 to 50 crores
and that
in
could
a period of 4 years.
And that can generate revenues of how much?
This will generate revenue as we ramp up. We'll see real growth in revenues only in next year.
Okay. What's the asset turn, but is it 3-4 times?
See, it will all depend. This is the first time we are tapping the market by selling city gas.
Okay.
So we are not able to give you the correct estimate at this stage.
Right. Okay.
Okay. You had plans to sell, SBI Macquarie had plans to sell a 39% stake in Ashoka Buildcon, the listed parent.
Right.
So can you give us an update on that?
See, they have time up to 2019 end. And say around more than a year is there still for them to exit.
Okay.
So no urgency as of now.
Banks are getting bid up as we speak. So pull up an Oriental Bank of Commerce, OBC, or a South Indian Bank, or an Andhra Bank. These are stocks which are, these banking names are actually doing quite well in trade. But apart from that, keep your eye on Infosys. That stock has seen a sharp cut as we speak. Infy has been an outperformer. In fact, the entire IT basket has outperformed the Nifty this month itself. So Infy on a month-to-date basis is down about 1% versus the Nifty, which is down about 5.5 to 6%. But now I guess some profit is being taken off that. So Infy, very sharp fall seen, now down close to about 2%. But let's move on to a CNBC TV 18 exclusive. CNBC TV 18's Lata Venkatesh caught up with Keki Mistry, the Vice Chairman and CEO of HDFC Limited, and began by asking him about the impact of a rate hike by the RBI on the company's cost of funds.
We actually at this point of time carrying something like 20 or 21,000 crores of liquidity in the balance sheet, which includes government securities. Okay. So liquidity is in the form of near cash or cash equivalent. So we have a lot of liquidity. So we will go to the market at the right time when we believe it is a good time to go to the market to raise money.
Compared to the first half, second half average will be how much more expensive?
Logically, if interest rates are 0.25% higher in the course of the second half versus the first half, to that extent it will start reflecting also in the incremental cost of funds we do from market.
Okay.
But we may not do too much from the market. We may raise more money through deposits. We may raise more money through international sources. Okay. So we have, fortunately for us, a huge diversity, a huge range of instruments through which we can raise money. So we are not dependent.
Are you tapping masala bonds?
Now we are looking at the international market, whether it's in the form of masala bonds or it's in the form of an external commercial borrowing. We are looking at it. We're exploring it. This as in today is probably not the best time to go to the market given the volatility around the exchange rate. But over the next 2 weeks, 3 weeks, as markets settle, we will certainly look at
now, what about the risk aversion in the market? One theory among debt fund managers is that now there will be a separation of men from the boys. Companies like HDFC will get cheaper money actually because money is getting pulled out from those who are slightly less comfortable. So will you see spreads between housing finance companies itself rising?
I would think there would be some distinction that happens whenever there is risk averseness in the market. We saw that happening in 2008-9. We saw that happening in 2013. We generally tend to benefit a little bit by virtue of the fact that people perceive us as being extremely safe and therefore be able to get money at find a rate. I can clearly tell you in 2009, we were a big beneficiary. 95% of our funding, I'm not talking of the bond market, I'm talking of the deposit market. 95% of our funding in the second half of that financial year, 2008-2009, came through deposits. Okay. And deposits was really the instrument we used for funding the balance sheet.
As promised, let's shift focus to the commodity space. Manisha is with us. Manisha, tell us.
Okay, enough conversation done on crude and global markets. Have to look at what's happening in the Indian markets. And while we are looking at a monsoon still 9% below average until now, and we are looking at a date, end of this month is when the monsoon will start withdrawing also. The good number really comes in sense of the food grain output. The first advance estimates from the Food Ministry government has come in, and that shows that you are looking at a 2018-19 Kharif grain output at an all-time high of 141.59 million tons. Much higher than what we were looking at in the previous year. Also important is that the rice output also is seen at all-time highs. We also are looking at the average output, of course, for the last 5 or 6 years has been 129 million tons. In comparison to that, 141 million tons is pretty on the higher side. There also is a soybean crop, which is also looking much higher as compared to last year. As comparison of 20 million tons, this is 21.5 million tons is what we're looking at in sense of oil seeds as well. So almost everywhere that you look in sense of the output in sense of food grains, whether it is coarse cereals or soybean or rice or wheat for that matter, we nearly are hinging or looking at record high numbers in sense of output for that food. Ranisha Chanani now joins us to talk more about that. Ranisha, hi. I know you follow non-agro more, but have you seen any numbers in the agro space as well? And what would this really mean for the prices of many of these agri-commodities?
Hi Manisha, I really don't track agri commodities much, so I haven't seen those numbers.
Never mind. So let's talk about the the non-agro space yet again then. And what's your sense really for the gold and silver prices? Because that is something that the markets would be keeping an eye on, especially ahead of the US Fed meeting today.
Yes, Manisha, gold is consolidating around $1,200 and silver around $14, $14 to $14.50, and market is really waiting and for the Fed decision. Everybody knows that interest rates would be hiked today and even in the month of December. So what the market is watching for is the comments coming in for the next year. So whether the interest rates would be more than 3% next year or not, that is the main concern. Whether the interest rates would be greater than the inflation numbers or not, that is what market wants to know. So now as we are standing at 2% this year, 2 hikes, that means 2.5%. And if we have 2 to 3 hikes next year, that means interest rates can go up to 3% or more. So this would be a very much, a dollar positive if we see that comments coming in that.
Clearly, it would be very important to see on what the US Fed really comes out with. As of now, the markets really are anticipating not another interest rate hike, and that, of course, has been weighing onto the US dollar. But, Renisha, how have you seen the crude oil prices after nearly 5 or 6 days of constant gains? Today seems to be the day of correction. Is it an opportunity to buy, or are you looking at some consolidation?
I think this rally could continue forward. So yes, this consolidation should be used as a buying opportunity. And if prices sustain above 52.75, I would recommend to buy for the targets of 53.50 at NCAs.
One quick word on the metal space as well, Renisha, because it's a third straight day of decline for this one. Of course, ahead of the US Fed meeting, we have seen the volumes decline, but the US-China trade concerns, that uncertainty just about continues. How much of further pressure are you expecting here?
I'm expecting somewhat profit booking in the space. The prices have pulled up very fast in last week, and that's why we are seeing some profit booking and consolidating at higher levels. But I think selling could be initiated at current levels, and we can see 1 or 2% decline in the prices and profit booking. But gradually, on positional basis, I would be buy on dips strategy that should be used. But for intraday, selling recommendation in copper and zinc.